Market Outlook. Calendar Week 19. Calendar Week 18 was not merely a week of scheduled events for digital assets. It was a week in which macro data, monetary policy, and geopolitical risk channels acted on market structure at the same time. The key reference point was the Fed meeting. The policy rate remained at the upper bound of 3.75%, while yields confirmed the restrictive financing anchor. For digital assets, the transmission ran through the dollar, real yields, and risk premia. When financing costs remain elevated, capital becomes more selective. Liquid core segments are preferred first, while market breadth then determines movements beyond Bitcoin and Ethereum. At the same time, the Iran conflict remained the central geopolitical disruptive factor. The focus was on energy, transport routes, and the Strait of Hormuz as a critical axis for oil, gas, and shipping. The market processed this issue as a macro channel. Uncertainty around energy and freight costs increases inflation pressure. Higher inflation pressure stabilizes rate expectations at restrictive levels. More restrictive rate expectations support the dollar and keep real yields elevated. In digital assets, this channel is reflected in weaker altcoin breadth, thinner order books, wider spreads, and short-term flow. The economic data from the previous week did not provide a uniform picture. In Europe, the inflation and growth backdrop remained mixed. In the United States, the focus was on growth, income, spending, PCE components, and labor costs. The data mattered through the question of how stable the restrictive rate framework remains. For the crypto market, this created an event-driven environment. Price movements emerged where data, yields, the dollar, and headlines touched the same channel. Two markers are sufficient as a transition into the current situation. Bitcoin dominance is currently around 60%. The Crypto Fear and Greed Index stands at 39, placing it in the fear range. This combination describes capital concentration in core beta, limited altcoin breadth, and elevated sensitivity around data windows. Quantum data analytics did not develop any research signals in this environment. The reason was operational. The market regime remained event-driven, with rapid impulses from Fed communication, macro data, geopolitical headlines, and derivatives positioning. In such phases, the risk of regime misclassification increases. Signals from more stable market phases lose explanatory value when exogenous news flows dominate price formation. For that reason, filter adjustment, retraining, and validation remained the focus. No activation took place because structure, liquidity, and event windows were not confirmed. For calendar week 19, the focus shifts to clear event windows. At the beginning of the week, European purchasing managers' indices and US factory orders are in focus. These data feed into risk assessment through growth expectations, euro-dollar dynamics, and yields. On Tuesday, US ISM services and JOLTS follow. Both data points act through the labor market, services inflation, the rate path, and real yields. On Thursday, initial jobless claims and productivity data move into focus. On Friday, the most important US data window of the week follows with non-farm payrolls, the unemployment rate, and the wage component. This block affects the dollar, the yield curve, Bitcoin, Ethereum, and altcoins. The crypto-specific calendar remains relevant. Token unlocks, including SUE and further May releases, act through additional supply, exchange inflows, and local order book depth. They do not define the overall market, but they can increase slippage and volatility in individual projects. ETF flows remain a second crypto channel through spot demand and Bitcoin's relative strength. The geopolitical situation remains a disruptive factor in the background. New reports on energy infrastructure, transport axes, or Hormuz can overlay market reactions. The mechanical path remains unchanged. Energy and freight costs influence inflation expectations influence the rate path, and the rate path affects the dollar and real yields. This creates pressure or relief for digital assets. Operationally, the data windows on Tuesday, Thursday, and Friday are especially relevant. Around ISM services, jolts, jobless claims, and payrolls, elevated volatility, spread widening, and slippage are to be expected. For tokens affected by unlocks, the risk of local price distortions also increases. Outside the core BTC and ETH pairs, execution quality remains decisive. This post is not investment advice, not a buy recommendation, and not a sell recommendation. It is provided exclusively for informational and research purposes. Quantum data analytics. Analytical. Strategic. Innovative.